Welcome to another episode of Selling Life and Annuities. I'm your host today, Ray Parman, Life Insurance Sales Manager here with Gordon Marketing, and I have today here a good friend of mine, Paul Bechtold, who's our RVP and manager of our Debt Elimination Programs. And today, Paul, we're going to talk about means-tested financial assets. Now, I will be honest, I am not real familiar with that concept. I am familiar with a couple things that I think might go down that path, but for everybody tuning in, I was wondering if you could just kind of break this down, kind of unpackage that for us, if you don't mind.
Yeah, Ray, it's really interesting is there's a lot of them here. We'll talk about every single one of them, but they're kind of concepts that fly under the radar, so to speak, as we're talking to our clients and we're talking about the advantages of cash value life insurance in particular, and sometimes annuities. The one that comes to mind the quickest is college planning and the FAFSA process, and the fact that cash value life insurance and annuities, when we go to fill the FAFSA out to apply for student loans for college, are exempt assets, right? So it's going to lower the expected family contribution to college, which is the parents and the students' part, allow us to get grants and scholarships sooner, quicker, and also to get loans from the government. Okay, so that one's kind of an easy one. Now, the one that pops up now and then, especially during Medicare season, hits my mind is the fact that Medicare Part B and D premiums and Social Security income for seniors are predicated on means testing as well, meaning if you make too much, you're going to pay more. Or in the case of your Social Security income, part of your Social Security income could be taxed. Right? Okay.
That hurts. Yeah.
Given that we're putting our money into a cash value life insurance, growing it tax deferred, and then taking a loan against that policy, loans, would you agree, Ray, are not taxable?
No, because you're just taking a loan against your policy. You're not receiving it as income, right?
Correct.
Okay.
So it's a way to get income without declaring income, right? And so, again, cash value life insurance can avoid taxation of our Social Security and might lower our Medicare Part B and D premiums. Okay. The other one is that seniors have to deal with is RMDs, required minimum distributions, right?
Yep.
Okay. So let's just say that we've got all of our money in qualified money. Okay. Well, what does tax deferred mean, Ray?
Well, kicking the tax can down the road, basically, right?
But you're going to pay tax.
Yeah, Uncle Sam isn't going to let you get away.
And that age now, even if you want to hold off, is 72, correct?
Yeah, it was. It seems to kind of creep up every now and again.
Was 70 and a half, it's going to 72. I believe it's going to go to 74 now.
Yeah.
Between where you can defer, hold off on taking those. But when you reach 72, what is the government basically saying to you? They're saying, I've waited long enough, I want my tax.
Yeah, we want our money, and we're going to force you to give it to us, basically,
right. So if we have more of our money, again, in cash value life insurance, or like a Roth annuity, that kind of thing, right? It's gotten a tax, there's no tax implication, right? Now we can reduce our RMDs, right?
Oh, yeah.
As well.
By all means,
okay.
Yes.
Next one that seniors are concerned with is long-term care needs in the future, right?
Yeah.
So with long-term care, there are what's called look-back periods. We have to position our assets in a way where when we go to need long-term care, we can't have assets in our possession, right? And that look-back period, I think, is around 5 years.
I was going to say 5 years, and there's a guessing game because we don't know when we're going to get ill or have a long-term care type of episode come up.
Right. So preparation long ahead of then, where our assets are now positioned again. And that magical cash value life insurance is a beautiful thing, right? Now, the obvious one is estate and legacy planning, right?
Oh, yeah.
And the beauty of that versus holding your money in a qualified account that now gets willed to the next generation is life insurance death benefit always passes tax-free.
Yes.
Right?
Yeah.
So that one's a no-brainer, right? But there's some other things that can benefit clients during their living years. For example, I own several cash value life insurance policies, and I sell my home, and now I want to go buy a bigger one. I want to apply for a new mortgage, okay? That mortgage application process, or maybe even an automobile or a business loan or something like that, is going to go much better when we have assets to declare.
Oh, yeah.
And those financial assets like life insurance and annuities make great collateral, don't they, Ray?
Yeah. And I was going to also ask you, too, just with the life and annuities, what what makes them exempt from some of this means testing? I mean, forgive me if I'm asking this question out of ignorance. I just want to know, why that is.
Well, the reason is that life insurance and annuities are financial assets that are protected by contract law. You have an agreement between you and that insurance company. Okay, they're not under tax law. Okay, so qualified plans, for example, are under tax laws, and they have to abide by IRS guidelines.
Yeah.
Okay, so life insurance, especially if it's designed as a non-MEC policy, for example, completely flies under the radar, escapes that tax law.
Is that definition of life insurance pursuant to what the government says, right?
Correct. And to a degree, sometimes annuities, if they're structured properly, can avoid a lot of that scrutiny as well. So for you folks out there that aren't aware of this, and you have senior clients, especially ones that have large lumps of money or looking to distribute money in certain kinds of ways, give us a call here because we might be of great help to you. Listen, everybody wants to pay the least amount of taxes possible, and everybody one day when they pass away would rather their money go where they want it to go versus going to the government and the people that they don't know.
So if somebody does want to learn more about this, is there somewhere like a website or somewhere they can reach out to learn a little bit more about this information, Paul?
Well, yeah, you could do some basic Google searches, but the best thing to do is give us a call here at Gordon Marketing. Ray, you're a 24/7 guy. I'm a 24/7 guy. Ray at GordonMarketing.com, Paul at GordonMarketing.com, or give us a call, and we'd be glad to answer those questions. The other place to always go, and I always encourage agents to learn to do this and become comfortable with this, is contact the carrier's advanced planning departments. Okay, they have tons and tons of resources as well as legal experts in those departments to answer any and all of these questions where there is no guesswork involved. Okay.
Yeah.
So rather than depending on a third party, maybe that you're not sure if they have the answer, those carriers always have the right answer for us.
Oh, by all means. Yep.
And would you agree that'd be the best place to go?
Absolutely. So, Paul, what other benefits can be created with a strategy like this? Implementing these types of products.
Well, obviously, to me, this is just a secondary kind of benefit that comes along the way. It doesn't matter whether it's an accumulation-focused IUL that we're using for retirement, or a whole life policy that we're using for debt elimination, or whatever the case may be. Maybe it's a college planning scenario, whatever. These are just things that come a long way or incidental, but in and of themselves and by themselves, they're worthy of taking a look at what the benefits of a properly structured cash value life insurance policy could do for the client, because they're going to be very thankful when that time comes in the future.
Yeah, by all means. And there's nothing that makes me happier. Just the environment that we live in today where things are getting more and more expensive. Tax rates are going to be on the rise too if they haven't already started. And just to be able to have some products and strategies out there that helps navigate that we can all take advantage of. It makes me really, really passionate and very happy about this industry that we work in, and certainly encourage everybody out there tuning in to reach out to us on your next case like that. So, Paul, I think you already mentioned that, but if you do want to get a hold of us here at Gordon Marketing, it's just Paul at GordonMarketing.com. I'm Ray at GordonMarketing.com. The office number here is 800-388-8342. My extension is 107. If somebody feels like giving you a jingle there on the cell phone, Paul, how would they contact you there?
317-626-3054. I'm 24/7. Be glad to give you a call back.
All right. Well, Paul, that was some great information. Thanks for sharing that today. I'm going to go ahead and close this one out for us. Don't forget, if you're tuning in and you like what you see out there, don't forget to like and subscribe to our Selling Life and Annuity YouTube channel. We release a new episode every Tuesday. And for now, Paul, we'll just let you guys go. And Paul,
happy selling.